At some point in your life, if you have a legacy to protect, you had to read some tea leaves. You had to realize that, oh, maybe property is the right thing, or maybe stocks are the right thing, or maybe gold is the right thing. Something told you that, and you still have that ability inside of you, which I know a lot of people like to make people think that, oh, you don't have that ability inside of you because you don't know what you're doing. Mark my words, I know that the majority of people watching this are going to be 45, 50 years old, plus. And for you, I don't care what anyone says. I've said this since 2021. All of these young people can go on about their Bitcoin and their trading and all this other stuff. It's going to be older people who end up getting their hands on the Bitcoin because you have one thing that young people don't have, and that is patience to do this. And yes, it might sound scary right now, but let me tell you, at one point you have to take a risk. At one point, you had to realize that if I want a better future for myself and my children, just like my parents had to, I got to invest in property. I got to invest in equities. I got to do something. I got to work hard. I got to put my money away. I got to do this. That is the fire that is needed right now, because otherwise what will happen is your wealth will continue trending downwards as a percentage of the overall money supply, because real estate is completely juiced out. There is no reality on earth where real estate can grow for the next 50 years like it has for the last 50 years. Absolutely zero reality on earth. Every single person will be completely priced out of all real estate. So here's what I predict will happen over the next 50 years. Prime real estate will continue to trend upwards, because the people that learn how to pivot their wealth will still need a place to live. And I believe that normal single-family homes, multifamily homes, etc., apartments, not the special ones, will continue to stay stagnant. This video is not really for anyone who's, thinking about getting into Bitcoin because they want to get rich and blow the money before they die, because they don't believe in a future, they don't believe in having children, they don't believe in leaving anything, they don't believe in supporting their charities, they don't believe in anything else besides their selfish desires. And by the way, that's cool too, but this video is just not for you. This video is for people who have a sense of personal responsibility, whether it comes from within them or from God, about the world that they're going to leave for the next generation. That's what this video is about, because if you are that person and you are wondering and you want to leave a world or resources for the people who come after you to be able to lean on, to make more of an impact in the world, or just not even to make more of an impact, just to have an easier life than you did, well, then the question you need to be asking yourself is, where are those resources going to be held? Where are those resources going to be held? And the data shows us that people with under a $30 million net worth, roughly, let's say, $500,000 to $30 million, majority of that is inside of real estate. And that's a big problem, right? And by the way, it's not your fault. Real estate has been the incentivized asset to put your wealth into, because it is a securitized asset and can allow the financial system to grow in a way that is a lot more stable than in something else that might be more volatile, right? Even though equities and things like that have done really well, real estate really stores wealth properly. It stores it quite nicely because it's not mark to market. You're not going to get margin calls all the time. Banks can lend out money for 30-year time periods in the USA and longer time periods, than average investments. And people feel comfortable borrowing against their home. For some reason, people feel more comfortable borrowing against their own home, securitizing their home, rather than actually securitizing an arm's length asset, right? People think, oh, I'm not securitizing my home if I take a mortgage on it. That's exactly what you're doing. You are securitizing your asset and putting it in the hands of other people, but then you want to complain about the idea that people who are wealthier than $30 million typically have their wealth in equities and public markets, right? And bonds, for example. So every asset, if it's going to go up in value, has to become a securitized asset, because the very nature of securitizing the asset opens it up to the financial markets, which allows capital that is printed, money that is printed, currency that is printed to go into it. Property prices didn't really go crazy until the 70s. Why? Because that's when the first securitization of mortgages as a basket came in. Suddenly, financial markets could realize, wait a second, I can just trade mortgages. So I can take all this printed money, trade that I'm getting for an interest rate of, let's say, 1%, and I can just trade it in mortgages that are going to give me 7%. Like, of course I'm going to take that trade. So mortgage-backed securities and this, that, and the other, and other financialized tools came out, and that's when property prices started going through the roof. If you remember back, if you've lived that life experience, when in the 1970s is when properties in the main countries, right, the US, the UK, Europe, started going up in value. The reason why they started going up in value beyond the lifestyle premium of I just want to live in that house is because of the securitization of the asset. And again, as you know, if you don't know, you're about to know, and that is that Bitcoin is about to go through this securitization process because of the ETF. Right, the ETF allows institutions to lend on Bitcoin. It allows people to speculate on Bitcoin. It becomes an accepted financial asset once it becomes an ETF. If you are someone who is thinking about the future, you're thinking about when am I leaving this world? If you truly believe in your heart and your soul that you must leave the world better than you've lived in it, well, then the question you should be asking yourself is, which asset is going to allow me the breathing room over a period of time in order to make sure that the wealth that I've accumulated today can be affecting the world in 30 years, 40 years, 50 years. By the way, if you've got this far, I want you to subscribe to the channel, because these are the things that I believe people need to think about when it comes to the future of what's happening here. This is the type of thought process that needs to happen. And this is the type of conversation that we need to have about Bitcoin, because this is the type of conversation that gets people to act. So please subscribe to this channel. It's extremely important so that the YouTube algorithm gets spanked enough to put this out in front of people, because it's not just you and I. The next point here, and why I decided to move over to Bitcoin and not focus on real estate, and my parents too, etc., is because these things are important to understand. I can tell you all the logical fallacies of real estate, and all of that can make logical sense. But in order for you to actually see what is happening and actually execute on it, it goes a little bit deeper than just logically. You have to maintain a property and you don't have to maintain Bitcoin, yeah? And then the conversation always is, yeah, but property's actually paid off, right? Bitcoin is unproven. Property's actually here. I can actually live in it, right? What can I do with Bitcoin? So it is an illusion, because imagine if most people's property portfolios, and I'm not talking about your home right now, I'm talking about your property business, your rental income business. Imagine if it was valued mark to market. Most people would not be able to survive through the downfalls because of the amount of leverage they take. But this feels good for people because, oh, wait a second, it's the only asset where I can actually leverage and sit through the downturns without being a sophisticated risk manager, because there are certain leeways put into place to allow me to do this. And that's up till now, while property has been a good securitized alternative for the amount of debt that's been printed. What happens when that changes? And so the next element point of this is, the downstream point of this is, you can not only take a non-mark-to-market leverage loan against your property and sit there without any short-term headaches, but you can now also cash flow it, right? Because people need houses. People always say, people need houses. People are always going to need property. People are always going to need a place to live. People are always going to need this, that, and the other. That's all true. But what if they don't need your place to live? What if they don't need your house? What if your house and your area and your state, because of your elected officials in 30 years, turns it into a shithole and nobody wants to live there anymore? What happens in that scenario? So it's all good, well and good saying, hey, you got to look at your cash flow right now, and people always need houses. But what do you do? Do you really feel safe leaving the decision about what happens to your wealth into the elected officials, especially as this world gets stupider and stupider. I don't feel comfortable with that. You know, my family is very blessed because most of the property that we own is inside of London. And so from that perspective, London is always going to be a major player city in the world, at least for the next 50 years, right? Who knows what happens after that? But typically, London is always going to be, and it's always going to have a position in the world as this world transitions, even over the next, 50 to 150 years, right? I don't think London's going to get demonetized anytime soon. But what happens if you don't have your property in London? What happens if you don't have your property in a prime city? What happens if the only reason your property is actually being rented is because it's sitting in a place where there's a big factory and they have jobs? And then what if that factory decides to move? Right now, a lot of people in the U.S. are feeling benefits on their obscure real estate because there's been this decision to move semiconductor factories from Taiwan back to the U.S. That's great for now. What happens when you get another person and says, hey, no, we're good with Taiwan and China now, so let's move those factories over there, or let's move them to Mexico or wherever else in the world? What happens when you realize that the cash flow that you are generating on real estate is you looking 30 centimeters ahead of you rather than actually looking 30 years ahead of you? Cash flow is not guaranteed. Everyone thinks cash flow is guaranteed. And ultimately, cash flow is not guaranteed because a situation like, the big flu season that everyone went through happened. And they basically said, we're going to put a moratorium on the rent. So you don't need to pay your rent at all. The government said that. You don't think the government is going to do that to you as this situation gets worse, as they need more votes, as they, et cetera, et cetera, et cetera? So you have a choice to make at this point. If you are, and if you have felt really, really safe and really, really emotionally connected to your property portfolio, I need you to tap into. I don't need you to do anything, actually. I would implore you to tap into that first moment where you realized that real estate was the thing that you needed to do. The moment before you had any real estate. The moment where you were given real estate. Whatever your circumstance was. Because whatever your circumstance was, you are here to protect that capital for whoever carries your name next. And if you do a bad job of it right now, they will suffer. So you need to tap into that energy when you first stepped into it and realize the world is changing and there may be something to look at with Bitcoin after the single biggest asset manager in the entire world has decided to apply for an ETF. There is a lot of people with emotional connection to real estate, my parents included, which is why the way that I did it with them was to say, why don't we just refi at the low interest rates that were around and buy Bitcoin as a diversification from your real estate portfolio, and therefore stepping away from the reliance on real estate, and then we'll let the tenants pay for that Bitcoin. I'm not saying you got to get rid of your real estate. What I'm telling you is that real estate is not going to perform for the next 50 years like it has for the last 50 years. You don't even have to believe me. You just got to look at the data. Go value whatever house you're living in. Go figure out what it was worth 50 years ago. Take the compound annual growth rate and compound it for the next 50 years and tell me whether you think that's realistic or not. It's not going to happen. It's absolutely not going to happen. So the question that you're faced with is, am I a slave to my emotional connection, or do I still have it within me where I have that little bit of risk? I'm not saying it's a lot. If you've got $1 million property portfolio, one Bitcoin sitting at $40,000, talking about 0.4% risk profile. Even if the thing goes to zero, who gives a shit? But what if it doesn't go to zero? What if it becomes what BlackRock thinks it's going to be? What if it becomes what Michael Saylor has bet his entire company's future on? And by the way, these people aren't stupid. And the one thing that they've done, the one thing that they've bet on is that in a world where there is infinite amounts of money to be printed, scarcity will always win. That's what they've bet on with Bitcoin. That's what BlackRock's betting on. That's what Michael Saylor's betting on. And in a funny way, when you got into real estate, or when you were handed real estate and you understood real estate, that's also what you bet on. It's what I bet on when I was in real estate, because there wasn't enough buildings being put up and more people wanted them. We all have bet on scarcity, and right now Bitcoin is the scarcest asset humanity has ever created. And it's about to be securitized, and you're about to miss your opportunity as it takes an exponential leap up. So if you're in real estate right now wondering, how do I protect this legacy to make sure that whoever carries my last name next actually has something to carry, understand the 3 points that I've made over the last 3 videos. The reason why people invest in real estate, there's 3 pillars to it, I believe. Number 1, it's a physical and thus concluded a safe asset to rely upon and fall back on. Right? They believe it's physical, but that's the worst reason why. If there is no reason on earth why people have been investing in real estate, because it's physical. That's the lie that Wall Street tells you to keep your money trapped in real estate to take out more mortgages. The reason why people have invested in real estate is because it's a securitized asset that most people can have access to and simply understand with no margin call. Right? Pillar number 2, why people have invested in real estate. It generates a cash flow reliably, and the return looks viable because of the non-mark-to-market leverage that's been applied, both in the form of capital and labor. If most of the people I've ever spoken to with property, if they factored in their own wages for actually servicing that property portfolio, the property portfolio would be in a negative. Most people I've ever spoken to. But you have applied a non-mark-to-market value to your own labor and think that your property portfolio is actually profitable. Most people would not be living with a profitable property portfolio if they actually mark-to-market the value of their own labor. Secondly, the cost of that capital is non-mark-to-market. So everyone thinks, oh, I don't have to worry about this for 5, 10, 15, 30 years. I can just borrow today, and that's the interest rate, and I'm set for that. That's the one valid point that real estate has, right? And thirdly, on the leverage point, I can put down only 10%. I can put down only 20%. I could put down XYZ% and generate some leverage. The most profitable real estate transactions in the world, long-term portfolios, have been done around the 30 to 40% deposit range. If you're sitting with a 10% deposit put down on a property portfolio, you are one bad move away from bankrupting that entire property portfolio. You have to have a certain amount of equity in the portfolio in order to make it work. But that is pillar number 2 as to why people think it works, because it generates this cash flow. And again, like I told you, people with up to 500,000 to 30 million believe that real estate is the best asset because it generates this cash flow. People with 30 million to a multiple billions, based on Charles Schwab's data, every wealth manager's data, they rely on equities and they rely on the market to give them that cash flow, which Bitcoin is about to step into. Bitcoin is about to become a cash flow asset as soon as it becomes an ETF, and I can do derivatives against it. So, pillar number 3, this emotional connection, which is the one that we've been talking about here. Yes, emotional connection is very, very important. It is the asset that your parents did. It is the asset that your grandparents did. It is the asset that you have spent your entire life nurturing. But I'm here to tell you that times are changing. And if you don't pay attention to the fact that times are changing, all of the work that your grandparents, your parents, and you have put in will no longer be passed on, because times are changing and you have to get smarter with time. And again, I will reiterate, I am not talking about selling your entire real estate portfolio and putting it all into Bitcoin. That's not what I'm saying at all. What I'm saying is stop being arrogant. Stop being scared. Find that part of you that took that risk to start with and realize that times are changing. The world's biggest asset manager is about to start marketing Bitcoin through all of its advisors. And you need to tap into that fearlessness again. Because if you want your last name to mean anything in 50 years, 100 years, 200 years, and you don't have prime real estate, you just have normal real estate, the risks are outweighing the rewards at this time. And you must lose that arrogance and start studying Bitcoin, because it is the next asset. And I'm not talking about starting with a 40% allocation. I'm talking about starting with a 0.4% allocation, or a 1% allocation, or a 3% allocation. My parents, whose average cost is around $10,000, what they'll find is that the second that Bitcoin surpasses $100,000, bear in mind they started buying in 2020, same year as me, just months later. The second Bitcoin passes $100,000, that 35, 40 years of effort that they've put in within a span of 6 years doubles the value of their entire property portfolio in liquid cash that they can move around the world with. They're no longer tied to the United Kingdom and its property taxation rules. They can move that capital around the world, change their residency, and pay the taxes wherever they decide to, wherever they choose to reside, and they're no longer beholden to the country that has let them down through the fiat system that subjugated every single person in it. That's the power of Bitcoin. That's what's going on here. That's why BlackRock's there. That's why Michael Saylor's there. That's why everyone is there. It is the most proven, hardest, scarcest asset humanity has ever created. And if you're in real estate, this is your fucking wake-up call to start thinking about this asset. But despite all of that, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.